From the morning reading, stocks turn down as bonds bounce. Apple weighs on technology as Verizon has a strong day. Weaker dollar boosts gold. The stock indices have turned down. The stocks are weakening after the Fed statement. The diamonds reversing down in late afternoon trading. It may now retest last week's low. The SPY is also doing the same, as is the QQQ selling off as well. All three remain below their 20-day averages, which keeps the downtrend intact. Some money coming out of stocks is moving into bonds. A slight sell-off in the dollar is boosting gold and other commodities. Stocks holding up better are energy, materials, utilities, staples, and telecom. The last three pay dividends and are defensive in nature. Technology is leading the market lower. Apple has a lot to do with that. 8 of 9 sectors moved lower on Friday. XLU, XLP, and XLF were the strongest sectors, while XLK was the weakest sector. Oil rose $1.60 to close at 32.16. Breadth weakened as advancers led decliners 1.64 to 1 on the New York Stock Exchange and 2.44 to 1 on the Nasdaq. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 7:03 a.m. Central Time, and I'm recording this in preparation for the market day of January the 28th, 2016. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's go ahead and dive into the morning report. And let's go to that one. And pretty much a mixed bag in terms of the U.S. market indices, with the S&P futures essentially scratch at the time of this cut. Now, live time, I just took a glance over my shoulder here, and the S&P futures are actually up about 8 points. So things seem to be moving around a little bit. Russell futures at the time of this cut was up about 0.5%, Nasdaq up about 1/3%, and Dow down just slightly. Crude oil essentially scratch, as is the euro, bonds, and gold is up about 0.5%. In overseas action, you have China down almost 3%, Hong Kong going the other direction though, up about 0.75%, Japan down about 0.75%, Germany down about 1%, and United Kingdom down about 0.5%. So this is really all over the place across the various markets. In terms of U.S. macroeconomic reports for today, we had the weekly variety of the unemployment claims, core durable goods, pending home sales, and the nat gas report for tomorrow. And this was kind of scrunched in order to get it fit in, but we have advanced GDP, employment cost index, goods trade balance, and then during market hours is Chicago PMI and the University of Michigan consumer sentiment. So just keep all that in mind. In terms of current volatility conditions, we've had quite an interesting pattern in recent trading days, where each day is basically nullified the day before. Current IV percentile for the S&P has been falling though, 39 on the Russell, 46, 47 for the Nasdaq, and 45 for the Dow. Short-term VIX down below 25. Skew remains somewhat elevated at just above the caution level of 125. Standard deviation moves were put in by the Nasdaq and the Dow yesterday. Kind of a really mixed day. Obviously, it was a FOMC day, so you had the action after the FOMC, which was largely a disappointment. In terms of the current charts, we can take a look at that. And you see what I'm talking about in terms of this recent action in the last 4 days, basically each day nullifying the day before. Now, the range yesterday was actually the largest of the 4 days, but that, of course, had a lot to do with the FOMC. But in terms of the open to close, it's pretty close to filling the body of the day before. You could call this a bearish harami, except that there's not much of a trend coming into it, really. Obviously, we've had the bounce up off the bottom, which did confirm and have a diagonal breakout. And yet, at the same time, we've not been able to move out of what we would call market phase one into phase two, which would require a closing body and close up above this recent swing resistance and above the 10 exponential moving average, and none of that's happened yet right now. In essence, you could just kind of lump all this action into one body and think of it as you open here and you closed here, and all this action really has achieved nothing thus far. You could call this something of a coiling, and that if we break out of either side of this recent 4-day action, that could be of note and would certainly likely spur something on. But it's kind of a mess right now in terms of trying to determine just which direction it's likely to go, and that's not really obvious at all. Same thing going on in the Russell, the Nasdaq. The Nasdaq, of course, was much weaker yesterday on the back of the Apple earnings report, and Apple was down hard. We take a look at Apple here, and you see Apple, big gap down, big red body, though it did hold the recent support. So that was kind of interesting at where it came to a stop. And then the Dow, very much like the Russell and the S&P. So where do we go with this? Right now, we probably mostly wait for a real signal to come out of this and give us some indication that we're breaking out. Volatility's got very much the same kind of pattern in recent days, though it is starting to kind of compress a little bit, and not so much the same exact big bodies, but volatility coming down a little bit each day, and then ultimately we'll have to see this resolve one way or another as well. Bonds also been compressing, and in here we don't have the big bodies, but we have, something of a pennant pattern. And frankly, usually you get these pennant patterns to break in the direction of the prior trend, and the prior trend was up. If bonds do break up, that means that the market, as in equities, probably breaks down. So something to watch there, and bonds might be what tells us which direction this goes. Another thing that's been highly correlated of recent with the market has been crude oil, and you see the action on crude oil has been trying to come up off of a bottom, and today is trying to break up over some of this recent action. Though yesterday, crude oil was up when the market was down, so the correlation kind of fell apart yesterday. So not sure just what to make of that quite yet, but certainly we'll want to watch the commodity complex, and especially crude oil, as that has been so much of a part of what the broad market has done of late. Let's go ahead and go to the daily report. Not a lot of change from yesterday. We're still in this phase one. We talked yesterday about where we could possibly go to phase two, and that would be a market improvement, but that failed to materialize yesterday. So we're still in phase one. This is basically looking for bear flag reversals, kind of fat toe in the water, maybe scaling into some positions, but very, very, very defensive in nature, because we just don't know if the bottom's really in or we're just setting up for another bear flag. And we have some mixed signals, because we have from IBD the confirmed uptrend signal has come into play. However, we've been very, very skeptical of late because of this range-bound market about the confirmed uptrend. This is actually the 13th signal since the beginning of 2015, and the prior 12 never achieved anything. So accumulation distribution score in the S&P remains an E, the Nasdaq an E, GMI index remains 0 out of 6 with the sell signal still in place. Stock charts decision point scoreboard has not changed. Consensus of all these mechanical signals in terms of portfolio investor posture is still market in transition, and we're waiting to see which way it breaks out of that transition, out of that big wide range. Certainly the bias right now is heavily leaning to the bears. In terms of intermediate term market posture, again, more mixed signals. We've had a couple, 3 days now where it has turned bullish, but it's also got a very bearish sentiment line. Position sizing opinions Also somewhat mixed, with one signal on the portfolio investor position sizing opinion coming in at 100%, and then the second one based on volatility at a reduced 50 to 75%. That intermediate term market posture, you can see everything's up over 20, which is a pretty weak posture, and yet at the same time it is clearly signaling bullish on all four of these indexes. Also remember, you still have that bearish sentiment line, so that's the longest term indicator, and it is the one that is least sensitive to changes, and it's still in a bearish stance. In terms of hedge warning status, we remain at level 1 plus. Remember 2 days ago we went from a 3 down to a 1 plus, with the some of these signals turning bullish, and yet at the same time we still are maintaining an elevated hedge warning status. We're looking to see if this just becomes a whiplash and back into more deteriorating conditions, or if indeed we finally break up on this pattern. You can see we still have plenty of concerns here. Market in decline, sharp increase warning, VIX futures up over 18. The skew still remains elevated. Current week out expected move remains elevated as well. Nothing particularly exciting from the New York Stock Exchange yesterday in terms of new highs, new lows, and we still have 3 of the 5 flagging as risk off on the intermarket risk aversion indicators. So still a lot of things here that tell us that this is not yet a healthy bull market, and you got to remain somewhat defensive. And the fear and greed index, some improvement here, but still in the extreme fear category. And you see the improvement from a week ago, yesterday, and then 2 days ago, and then yesterday. In terms of special opinions, no changes from yesterday. VIX is still outside the acceptable window to initiate new positions for novice traders in terms of option income strategies. And then in terms of covered calls and put selling, borderline acceptable for the novices. More aggressive traders may use a variety of suggested defensive postures to be able to start scaling in. But again, very, very defensive, and certainly if you're put selling, position size and scale that you're willing to own should this market roll over and break down once again. In terms of sector specific, you can see an awful lot of red here. Only utilities holding up, followed by consumer staples as having any kind of real performance at all across these different time frames. And you note that these are both very, very defensive in nature. In terms of percent change, you could see indeed telecom and utilities being the best performers yesterday. Consumer staples essentially scratch. On the 5-day, things are still positive, but certainly on the 1 month, 3 month, year to date, all this is a sea of red. Not a lot of great signs there. And I think that's probably enough for today. If you'd like to get emails, it's very easy to sign up, and these emails are only very limited in nature. You're definitely not going to pound you with a lot of emails that you don't want to pay attention to. Indeed, most of the time when I send an email, it's either a hedge risk level change alert, or it's very periodically I'll write a blog article or some other item of interest and send that on. Just go to this website here, scroll down just a little bit, find this button, click on that button, put in your name, your address. That will get you set up. That will also get you to where you can get a copy of the ebook that I've written about portfolio strategy. If you prefer to use the smartphone, you can text Falcon Global, all one word, to the number here, and that will do the same thing as going through the website. And I'll just scroll through these. If you've got a particular interest, you can go to the hyperlink and get more information. Lots of things going on. Disclaimers as always, hit the pause button if you need more time to review, and you note the full hyperlink down here takes you to the full set of disclosures. We'll see you back here tomorrow morning before the market opens with the Falcon Global Market Preview. Good trading.